Well, it looks like analysts covering Tesla are more clueless than we thought they were. Or maybe they just shorted the stock and they're losing so much money, they have to try to spread a false narrative.
Users access to Tesla's charging stations, but how much value could it drive for Tesla? My next guest says not so much, maintaining an underperform rating on the EV giant. Joining me now, Tony Sacconaghi, Bernstein Senior Research Analyst. Tony, you've got, I think a 150 price target on Tesla. It was close to there 2 months ago, but it's over 250 now. What makes you think it goes back down?
Good afternoon, John. Look, I think Tesla stock is very difficult to predict in the short term. Our perspective is that, upcoming numbers won't be great. I think there's limited chance that Tesla will eclipse consensus expectations in terms of deliveries this quarter.
Really? Nope. In fact, it looks like Tesla might beat the average estimate of 445,000 deliveries. Per the data coming in from insurance registrations out of China, we could see over 450,000 deliveries, as high as 480,000 deliveries, as per my estimate. This is just not factual.
I think margins will be down sequentially because they took incremental price cuts in the quarter.
Tesla actually has not cut prices too much in Q2. The Model Y Performance Edition was $56,630 at the end of Q1. Today on their website, it is $54,490. They've cut prices $2,000. But this analyst doesn't think that the price of lithium dropping 60% from November of 2022 will have any effect to margins. Or Tesla Shanghai cutting essentially their third shift workers. That's not going to have any effect to Tesla's margins. Okay.
And I think, most importantly, when we look forward, Tesla's continuing to try and grow at very aggressive rates, 30% plus this year, 30% plus next year. And it has no new product offerings. And so how do you create incremental demand when you don't have anything new per se? And that's Tesla's challenge over the next, 4 to 6 quarters before we have some new lower price models. So,
are you even kidding me right now? Tesla doesn't have any new models coming? Do you not know the Cybertruck is coming in Q3? Is this guy living under a rock? Is this an analyst that institutions listen to? This is putting me to sleep how uneducated this is. There's 1.5 million pre-orders for the Cybertruck. Wake up, my guy. See the sunshine. Maybe buy yourself a Tesla if you are so uneducated about Tesla.
So that's our concern, is that Tesla will either ultimately fall short on deliveries at some point over the next 4 to 6 quarters, or that we're going to see continued price cuts to be able to drive that growth.
One word: advertising. Elon said they would advertise. And the brand and the product have been this strong so far, they haven't needed to advertise, but now they're scaling where they can produce hundreds of thousands of vehicles every month. Advertising makes sense to introduce a brand that is new to hundreds of millions, billions of people. You don't think that's going to drive any growth?
How much does that matter, though, when there are all these headlines that kind of feel like the rest of the EV industry throwing in the towel and admitting that Tesla is king of the hill with this charging standard, and that Elon Musk was visionary in building out these stations? I mean, if you want to believe in Tesla, even if they have some near-term misses, it sort of seems like this charging narrative helps you.
I think it's an admission by competitors that Tesla has a really good network, and they want their cars to be able to use it. I think competitors have admitted that, Tesla has a cost advantage, that Tesla's been a pioneer in EVs. So, clearly there are many positives about Tesla. It's just fully reflected in its valuation. It has an $800 billion dollar valuation, which is essentially the valuation of the entire auto industry, even though they'll make less than 2 million cars this year, and the auto industry outside of Tesla will make about 78 million cars.
Is that even a fair comparable when GM's net profit margin is 5.84% and Tesla's profit margin, net profit margin, meaning to the bottom line, after the price cuts we've seen in Q1 at 13.44%, meaning Tesla's almost 3 times as profitable on every single vehicle they sell compared to GM? Is this a fair comparable to compare the amount of vehicles Tesla's selling compared to legacy automakers? No.
So I don't think this is a question of, Tesla's not known as a leader per se. I think it's really a question of what you want to pay. And to your point about the network, the charging standard for Tesla will become the standard in North America with all these OEMs signing up for it. But right now, Tesla has about 80% of the EV installed base in the US. So adding an extra 20% of cars that can use that network is not a big deal. And Tesla's supercharging revenues last year were about $600 million, which is less than 1%. And again, when we think about, how many more EVs are going to be able to charge on Tesla's network, right now it's pretty small. It's only about, 20% on top of the existing 80% of the EV fleet that Tesla has in North America.
So it's clear, this guy is fucking clueless. After all, most of Wall Street is clueless. And you've seen 4 downgrades recently with Tesla. But the stock has went higher. The stock is up from a low of $101 per share in January of 2023. Today, sitting over $255 per share. Why are these analysts so wrong? And why is this to your benefit? These analysts don't like to talk about PEG ratios. When they downgrade Tesla based on valuations, they go off of forward PE ratios, in which the PEG ratio incorporates that, but they also incorporate growth rates. Would you rather invest in one company with a 30 times forward PE that it's growing at 10%, or would you rather invest in another company with a 30 PE ratio growing at 50%? What's the better value there? What's the better stock to buy? Obviously, the stock with a 30 PE and a 50% growth rate. That's where the PEG ratio comes in handy, because the PEG ratio is the PE ratio divided by the growth rate. So for an example, Tesla has a forward PE of 68.82, a trailing PE of 75. So Tesla's PEG ratio, PE ratio divided by growth rate, is 1.28. The lower the PEG ratio, the better. What's an Apple PEG ratio sitting at today? Apple's PEG ratio is at 2.47. So Apple is almost exactly twice as expensive as Tesla if you factor growth rate, which seems like the only obvious way to value a company. What's Microsoft's PEG ratio? 2.98, over 2 times as expensive as Tesla, again, if you factor in the growth rate. Nvidia's PEG ratio is 4.04, over 3.5 times more expensive than Tesla. Google even is more expensive than Tesla, factoring in, again, the growth rate, with a PEG ratio of 1.51. All of this pessimism around Tesla's valuation recently is to your benefit. And this is the reason why, regardless of downgrades, the markets don't care about any one analyst. They see Tesla with the lowest PEG ratio out of essentially all of their peers, besides Amazon, which has a PEG ratio of 1. But do you really want to own Amazon for the long term here over Tesla? Probably not. You're going to make a better return in Tesla. My personal opinion. But the estimates have also been coming down. So Tesla, at the same time the stock has rallied, has a lower bar to beat on earnings. Tesla's EPS trends, we talked about this in the last video. This might be repetitive if you watch all of these videos, but we'll go over it again here in this video for the purposes of this video. 3 months ago, the EPS estimate for this quarter for Q2 was 91 cents. Today, it's 98 cents. So today, if Tesla reported 80 cents or 90 cents of EPS, that would be a huge positive. They beat estimates by quite a big margin. 3 months ago, if this was the case and Tesla reported 80 cents of EPS or 85 cents, Tesla would have missed the estimates. So this is going to lead Tesla stock to move higher over the next couple of months. Now, today, Tesla stock rallied almost 3%. You're now seeing 98 million shares sold short in Tesla. This is the highest official report from the NASDAQ since June 15th of 2021. It looks like you could possibly see a short squeeze over the next couple of days heading into the big catalyst, which is July 2nd, this upcoming Sunday, and that is the delivery number results. Based on those results, that is what is going to dictate what comes next for Tesla. It looks like it's going to be bullish, but I'm not a financial advisor. I'm not a financial planner. All I know is here in this video, we have to call the BS when we see it. These analysts have no idea what they are talking about. Let me know what you guys think about Tesla stock over the next coming days and weeks. I love to hear from you down below in the comment section. In the meantime, get yourself free stock while you're down there. Hit the description of this video and sign up for Webull. Deposit $1, get 15 free stocks. Throw me a free stock my way as well. It's a win-win for everyone involved. If you guys also want to come trade with me live in real time, link down below in the description of this video for the trading community. Nonetheless, you guys enjoy the rest of your day, and I will see you in the next one.